50-year mortgages, a new approach to housing affordability. Why long-term home loans, with the right planning, could be a game changer. As property prices continue to rise and home ownership feels increasingly out of reach, especially for younger generations, the idea of a 50-year mortgage is gaining attention. While it might sound daunting at first, with careful financial planning and the right borrower profile, these long-term mortgages could offer a practical solution to the housing affordability crisis. In this article, we'll explore the benefits of 50-year mortgages, draw lessons from Canada's experience with 40-year loans, and outline strategies that make these products effective for both homebuyers and investors. Lessons from 40-year mortgages in Canada. Canada's foray into 40-year mortgages offers valuable insights into the potential of even longer terms. Canadian lenders introduced 40-year mortgages in the early 2000s, particularly targeting young buyers and property investors. The extended repayment period lowered monthly payments, making it easier for first-time buyers to enter the market and for investors to manage cash flow. Many young buyers benefited by being able to purchase homes sooner rather than saving for years to meet higher monthly payments associated with shorter terms. Investors, meanwhile, used the flexibility to expand their portfolios as lower payments freed up capital for other opportunities. Importantly, these products were most effective for borrowers who approached them with a clear financial plan, regularly reviewing their repayment strategies, and leveraging options to pay off the loan faster when possible. Financial planning strategies, making long-term mortgages work. One of the main concerns about 50-year mortgages is the idea of paying off a loan over half a century. But with proactive financial management, borrowers can use several strategies to reduce the total interest paid and shorten the amortization period. Increasing regular payments, even small increases in monthly payments, can significantly reduce the total interest and time needed to repay the mortgage. Double-up payments. Many lenders offer flexible repayment options, allowing borrowers to make extra payments without penalties. This can accelerate the reduction of principal. Lump sum contributions. Windfalls, such as bonuses or tax refunds, can be applied directly to the mortgage, further reducing the overall term. These strategies were commonly used by Canadian borrowers to transform a 40-year mortgage into a much shorter one, often paying off their loans in 25 to 30 years, similar to traditional mortgages, but with the added flexibility and lower initial payments. Long-term benefits, building wealth and investment opportunities. Longer mortgage terms allow borrowers to enter the property market earlier, taking advantage of property appreciation over time. For younger buyers, this means building equity and net worth sooner rather than waiting years to save for a larger deposit or face higher monthly payments. Investors can also benefit, as lower payments improve cash flow and enable the pursuit of additional investment opportunities. Real estate remains a proven path to wealth creation. By making home ownership more accessible, 50-year mortgages could help more people leverage this opportunity, provided they approach it with discipline and foresight. Income growth and mortgage renegotiation. Another often overlooked advantage is the potential for borrowers' incomes to rise over time. As careers progress and earnings increase, borrowers can revisit their mortgage terms, refinancing to a shorter term, making larger payments, or renegotiating interest rates. This can substantially reduce the total interest paid without sacrificing affordability in the early years. The Canadian experience showed that many borrowers who started with longer terms were able to accelerate their repayments as their financial circumstances improved, effectively using the longer-term mortgage as a stepping stone rather than a lifelong commitment. Key factors in housing affordability: interest rates and repayment period. Housing affordability is shaped by more than just property prices. Interest rates and the length of the repayment period play crucial roles. Lower monthly payments from extended terms can make homeownership feasible for a wider range of people, especially when interest rates are stable or low. This flexibility can be a lifeline for those struggling to keep up with rising costs, offering an alternative to renting or delaying homeownership indefinitely. Guidance for borrowers: the critical role of financial advice. It's important to emphasize that the success of a 50-year mortgage hinges on sound financial guidance. Borrowers who actively seek advice, whether from mortgage professionals, financial planners, or trusted mentors, are far more likely to use these products to their advantage. However, there remains a challenge. Those who could benefit most from such guidance may not always seek it out. Education and outreach, therefore, are essential, ensuring that borrowers understand both the opportunities and responsibilities that come with long-term mortgages. In summary, 50-year mortgages are not a one-size-fits-all solution, but for the right borrower, armed with a solid financial plan and a willingness to seek advice, they can be a powerful tool. By lowering barriers to entry, offering flexibility, and enabling earlier wealth building, these products have the potential to reshape the path to homeownership and investment. The key lies in informed, proactive financial management and a clear understanding of the long-term commitment involved. With the right approach, a 50-year mortgage can be not just a loan, but a stepping stone to financial security and prosperity. Raymond C. McMillan, a graduate in Geography and Economics, University of Guyana, founder of the Macmillan Group in Canada, and co-founder of Prime Path Mortgage and Financial Solutions in Guyana, is a retired mortgage professional and active real estate investor who has been in the banking, mortgage, and real estate industry since 1994. He was first licensed as a mortgage broker in 1999 and has helped many people purchase their homes and invest in real estate in Canada, the U.S., and parts of the Caribbean. You can reach Raymond at 904-586-5636 or 592-623-3509 or visit our website, themacmillangroupinc.com.